Hey, how y'all doing? How y'all doing? Happy New Year. Late as heck, but still, but still. All right, so I have TikTok and YouTube and Credit Academy all in here at the same time. Y'all like the quality? I find so look, if y'all didn't know, now you can go so TikTok live studio, you can now go live from like a digital camera, a computer, and all of that. So like I'm very happy about that. Cause at first you couldn't. You only could do it on Windows. And I don't have a Windows. I have a Mac. So I'm like, but now y'all get the quality and I can share my screen with TikTok now and all of that. So let's reset the stage though. let's reset the stage. So hey y'all. I hope you guys are having an amazing new year. This is my first live of freaking 2026. I don't even know how I waited this long. But actually, this new year started very interesting because everybody in my house got sick. Like, I don't know what the heck is going around, but child, everybody in my home ended up catching some sort of bug. I don't even know what it was, but like we all got sick. So that took me out for like 2 good weeks. Had to catch up and all of that. So this is my first live of the new year, but we gonna just hit the ground running. I wanted to just start it off by doing a regular credit Q&A. Y'all know how we always do, just the live credit consults that we do. I can even invite people up if you want to come up and personally ask me a question. Or you guys can just write it in the comments. But I already see like on YouTube, people were already typing in their questions. So I'm just gonna start answering them. All right. So hey Shonda, I have a charge off that's $5,000, a little bit over $5,000 actually. Is it worth disputing this charge off or should I let it sit? How should I attack this charge off? It's about 4 years old. Okay, so being that the charge off is 4 years old, it is older, older than I would I guess like for you to just now beginning to like address it because it's like I'm stuck in the middle on one accord depending on the debt. Like what, well actually let me just get clarification. What type of debt is this? I know you said it's a charge off, but what was the original account? Was it a car? Was it a credit card? What was it? Because that will definitely determine what I would like suggest that you do with it. um and I'll be waiting for your comment again so I can answer that. All right. Oh shoot, dang, TikTok going as fast as crap. Okay, hold on. Hold on. Let me get y'all up here so I can see it better. Oh yeah, and guys, I want to show you guys something else too. Like I'll wait. I'm gonna answer some questions first. Because I do have some things to show you guys. I have a new DIY kit that I worked on, been working on for a while now, but it's finally like to the point where I'm like, okay, I like how, I'm satisfied with it. All right. I just got two beginner cars for bad credit. When in this process do you get to upgrade and get cars with higher limits with cashback options? Great question, Camille. So what I suggest is after your first number one, don't get any more than two beginner cars. So like the fact that you already have two, that's great. Stop there though. Like your next card, it should be a traditional card, a higher limit card, and also just like I said, like a traditional credit card. It should not be a beginner card. So stop there. But to answer your question, I would say give it a solid 6 to 9 months before you apply for a traditional credit card. If you do you already know like my recommendations in regards to like how to use your credit card, how to pay back your credit card and all of that. I don't want to go over it if you already know it because I said 1,000 times. I know y'all tired of hearing me saying it, but just a general overview. Keep your utilization under 10%. And what I mean is like whenever you are paying back your credit card monthly, make sure that you pay back at least 90% of whatever you spend during the same month, and then you good. If you keep your reported utilization under 10%, then you will have no problem getting pretty much any credit card that you want comes 6 to 9 months. All right. Should I submit a debt should I submit a debt verification letter to LVNV or should I just pay the balance? So LVNV is a debt buyer as opposed to a collection agency. So um challenging them, I usually don't recommend them or like portfolio recovery. However, they do pay the deletes. So if you do pay it, even if you settle it, they will delete it off your credit report. So I would suggest that you settle with them unless it's like just not your debt. Like it's literally not yours. Um wait. I accidentally exited out the comments. Speaking of debt, oh, my bad. I thought I had clicked off. Speaking of debt validation letter, actually, I'm gonna wait. Do the dispute letters have to be mailed out certified? So I don't. There's no, you don't have to mail them certified. However, if you're mailing it to a collection agency, then I would suggest that you pay, the $3-4 to send it certified. But if you're sending your disputes to the credit bureaus directly, it doesn't make a difference. Will you do another home buying class for 2026? Yes, I will. And let me tell you why I'm redoing the one that I did last year. I don't know if you guys know this, but like the rules are changing. Well, it has changed. Like credit is changing act like currently credit is changing, but also like especially specifically when it comes to home ownership. There are new credit scores that they'll be going by and abiding by this year. And so just new qualifications. So I am doing the entire home buyers workshop um completely over because again it's just new rules. So for it's actually the biggest change in our mortgage scores, our mortgage lending scores in 20 years. In 20 years. Um Once you do a pay to delete, would you still try to dispute it with the credit bureau to get it removed faster? No, not if you got it in writing. If you have the pay to delete agreement from the collection agency in writing, then it's no point. They do have 90 days though. So it's not like a sometimes most companies usually typically will delete it off your credit report within 30 days, but they do get up to 90 days to make the change. So even if you do dispute it, you can't technically rush them because they're still within their legal time frame. As long as you got the agreement, that's the most important part. As long as you had the agreement, then you good. Should I pay the original creditor or the collection company? Does it matter? That's a great question. And yes, it does matter. So if the original creditor is still willing to accept the payment on the account, then always pay the original creditor. Simply because that will, if it's a charge off, I'm assuming it's a charge off because you said should you pay the original creditor or the collection? If it's a charge off specifically, try to pay the original creditor. If it's just a collection that's not attached or tied to a charge off, then most likely the collection agency has ownership over the debt. But if it's a charge off, try to pay the original creditor because then it'll also get the collection account that's attached to it removed as well. Missed student loan payment and score dropped 150 points. How do I get back to 700s? So well, I mean, it's not like a simple answer as like, in that like do this one thing and you're gonna get those 150 points back. It not it does it's not gonna work like that. However, um you so okay, listen, this is how late payments work, especially with student loans. With student loans, they don't report the payment late until it's 3 months past due. So whenever it hits your report, you got a 90-day late, which is why you saw the decrease in your credit score of 150 points. So the only way to get that back is to continue to pay your current accounts, your active accounts on time. Make sure that you have at least 4 active accounts at all times. That goes for anyone, not just her. You should always have at least 4 open accounts on your credit report if you like actually want good credit. Um and just pay just on time. I mean, you can try to well, another thing that you can do, because I know that the student loans, that's been like a real issue for a lot of people, and I know that they're doing the rehabilitation program. So I believe that if you sign up with or contact your loan servicer, and most companies will agree to, if you make like I think 6 on-time payments, then they'll remove the late payments. I would try that. I would make sure that your utilization, like you should take advantage of reporting your utilization between 1 and 3% so that you can get extra points on that. So it's kind of just like working around it. Can late payments be removed? Uh it They can, but it depends on, like, the situation and who the creditor and your, the original creditor is. But yes, I mean, late payments get removed all the time, but it's not, I'm not saying that, like, I don't mean that, yeah, you can 100% get every late payment removed. I just don't want to, come off that I'm saying that, because I'm not. But yes, late payments can be challenged for sure. In documentation, what would you suggest is the next logical step? Oh, I didn't read your first one. Hold on, let me click on it. Wait. Okay, it says I have a, dang, it just left. Oh, here we go. Okay, I have a collection from NCS reporting on Experian and TransUnion. I've sent several rounds of letters and it still comes back verified even after the CFPB escalation. I just sent the 609 letter if they can't provide. Okay, well, wait. It's a lot. It's a lot going on, because you just mentioned like 4 different challenges. And I think that may be the issue on why you perhaps cannot get it removed. Number one, let's start from the top. You say you have a collection from NCS. So that's a collection agency. However, who is the original creditor? What type of debt is this? Number two, why'd you do a CFPB escalation? Because from the limited information of the comment, I'm not sure, but I'm assuming that you did the CFPB escalation way out of order, because nothing that I read would qualify for a CFPB escalation. And so if you do frivolous CFPB escalations, then it actually makes it harder for you to get it removed. So give me a little more information on that, because you did like 4 or 5 disputes and they don't necessarily align with one another. Like you said, you send in a 609. If it's not fried, don't you wasting your time sending a 609. Honestly, a 611 or a 623 would have been better if it's your account. But again, I'm just assuming, because I don't know what type of debt this is. Any advice if you're in a state that doesn't remove judgments for evictions? So it shouldn't be on your credit report. Since, what was it, 2017? They're not supposed to be on your credit report. So is that what you're referring to, Brittany? Good evening. Do you have an approved list of lawyers for consumer law have been disputing over a year with Equifax? No, I don't have like a readily available list of lawyers, but like, tell me a little bit about what's going on. Like, you say you've been disputing a year, but here's the thing. This is what I always tell you guys, because a lot of times I hear people come to me and they say, like, Shonda, hey, I've been disputing this account for 9 months. I didn't disputed it for 6 rounds, 7 rounds, etc., and it's not being removed. And the first question that I always have is, well, how are you disputing it, for one? Because a lot of times I find that people are just sending disputes, like sending random disputes, challenging who knows what on the account, and they're not actually properly challenging the account. So they'll have sent maybe 7 dispute letters. However, they're still technically in the bureau's eyes in like 2 rounds 1 or round 2, because your disputes are never escalating, because you're disputing it in ways that doesn't necessarily like align or make sense. You get what I'm saying? So don't tell me like how long you've been disputing it. I need to know, like, what are you disputing on the account, because that matters more than how many letters you've sent, how long you've been disputing it, etc. What if your credit card account was sold? So it was charged off. Um, what do you mean? If it's charged off, means nothing. There's nothing that you can do in regards to that particular account, because after it's charged off, they can't open it again. However, if you're referring to like what I would do in terms of your credit profile, I would absolutely make sure that I have my minimal accounts, which, just in case there's somebody in here who don't know what I'm referring to when I say, actually, you know what, I can share my screen now on TikTok. So let me just pull it up so y'all can screenshot it. Y'all know I'm a visual person, so child, I just would prefer y'all to screenshot it, and then I'll talk you guys through it. Give me a second. What's the easiest way to do this? Hold on, y'all. Why is it no? I don't know. Uh okay. I don't even know what I was just doing, but oh, that's what I was doing. I was gonna pull up the thing. Hold on. I gotta pull it up on my iPad and share the screen. Give me a second, guys. So look, this is so just to fill you guys in as I'm pulling this up, what I'm about to pull up and show you guys is the recommended credit profile that I recommend for anybody. Like, I don't care what your credit score is. If your credit is not over 750 to 800, then even if it is, but I'm just saying, like, if you don't have great credit, then you need to make sure that your credit profile matches this list. Why is my computer freezing? Hold on, y'all. That's because I got like 3 lives going on at the same time. So the computer is probably like, what the heck? Give me a second though. Okay. So I'm about to pull up the minimum profile recommendations. Had I known I would have put it up, I would have already had it queued up. But it's all good. It is all good. I thought I did have it though, somewhere in the cut, but I guess not. I don't like how my computer acting all crazy. You know what? Let me just go to Canva. That's probably the easiest way to show y'all. All right. So, tell me when you guys can see the screen, because I know it's gonna be like at different times. I would suck as a streamer. Let's talk about that. I would suck as a streamer because it's too much going on my screen right now, and it's just a lot right now. Like, I'm looking at like 10 different things, and I'm trying to like. All right, here we go. Okay, share. Oh, I forgot. I gotta go to Ecamm to share. Jam. What live stream are you? I'm using Ecamm Live. Girl, and don't ask me how to do nothing because I promise you I don't even know what I'm doing right now. I'm trying to figure out how to do it. Let's see. Yeah, that definitely wasn't supposed to happen, but like I'm trying to figure out how. Can y'all see that? Hold on. Listen, it's oh, why are you doing that screen? Can y'all see the entire screen? Is it good enough, child? Because at this point, I'm over it. Listen, I'm gonna practice, mirror it. You need to mirror it. Okay. Oh, I see what's going on. Hold on. I got you. You know what? I think I know what I did wrong. Is that better? It's upside down. That's not better. That's not better. So better. Okay, look. Wait, y'all gotta look. We gotta thug this out together, and we have to figure it out together. Okay, because I don't. It's still the same. Okay, so we're gonna try something else. Let's see. That is worse. She said, it's worse. Okay, hold on. Let's try something else. We just gonna click buttons until it's right. Okay. What about that? Oh, check my iPad. Okay. I wish I can see how it looks to you, like what you guys are looking at. Oh, child. We it's a lot going on. Okay, hold on. Oh, you know what? I think you know what? Whoever just said put it on your iPad, you might be right. You might be right, because that probably would be the best thing to do. So hold on, let me send it to my iPad and then pull it up. All right, now let's try it. All right. Hold on. I think I pray. I pray this will fix it. I think it will though, but hold on. I'm trying to figure out where I was. Mm, okay. Wait, don't look at that. Cause I gotta I gotta do something. Mm, why is it backwards? Oh, cause did I turn my mirror on? How do I turn my mirror off? Okay, I just need to turn the mirror off. I don't know how, but we'll figure it out. Um, so I just unmirrored my camera, so hopefully that works. Let's see. Is that better? No, why is this flipped? Um, that is so strange. Check the rotation. Hmm. This is Ecamm Live. Okay. Hmm. Yeah, because when we figure it out, it's gonna be good. But oh, I think I have. Is it just on TikTok that is doing that, or is it on YouTube as well? YouTube, is it? Oh, see, on YouTube is good. So that means it's TikTok. Okay, hold on. Let me just flip the TikTok one then. Um. Here we go. Wait, display capture, window capture, add. Oh, okay. TikTok. Hold on. TikTok is like, no, don't do it. She wants a okay. Let's take a breather at this point. Why is the TikTok doing that though? That is the strangest thing. Full screen camera. No. Like I don't even see an option to mirror. Like hmm. Y'all know what y'all gonna have to do? Y'all gonna have to just screenshot and flip it on your phone, okay? Until I figure this out. Cause I don't know what I'm doing. So we've already belabored the point. I'ma just go to YouTube though. Where is my mouse? Where is my mouse? Okay, I'm gonna try it again though. Hold on. And I'll be speaking as well. So that's annoying. I don't even want I can't even look at it because I'm so annoyed that it's like that. Yeah, I know on wait, it's on you. On YouTube, it's flipped too. In my view, right? You might not see the mirror option if you're on TikTok from your PC. Let's see. YouTube, it looks fine. That's crazy because like if you see how it looked from my view, it's flipped from my view on YouTube. But I'ma believe y'all. Dang, I'm trying to. All right. Like I said, just screenshot it if y'all on. Where is my mouse? If y'all on. See, that's what I get for trying to be fancy. That's what I get because I just knew I had the game figured out today. I had tested it earlier. I'm like, oh, I can hook up my camera and all of that, and I was very happy. Okay, but back to what we were saying. Um, yeah, good on YouTube. Okay, I'm gonna trust y'all. Is there an inverted option on TikTok tools? That's the thing because I'm on my computer. Like I don't even see the tools. I don't even see it. I'm sure. No, dang it. I didn't try to do that, y'all. Okay, hold on. I'm gonna put it back. I know. Child, I know. We're going through it. We're in this together. Together. I don't be knowing where the what's the colleges went, but anti-ways, like I was saying. Oh, but I think some come in. Yes, I was still trying to look for it because it's driving me crazy. Anyways, how y'all Friday going? How is y'all Friday? They give you every option for everything else except this, which is wait, is this it? Did that do it? Did we just do it? Oh, we did it. Okay. Okay. Yay. Okay. We finally have it. Okay. Great. 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 Now I am extremely happy. Yes. Okay. Now I can concentrate. Like, okay. So look, I'm gonna reset the stage because who finna edit all this out? So I'm just gonna just act like I haven't said anything and like I just came in here, okay? I mean, or I just introduced this topic or whatever. All right. So, anyways, hey guys, I hope you guys are having an amazing Friday. No, I'm just playing. But anyways, what I was saying though, if it doesn't matter what your credit score is, right? Look, we finna get back serious. Let's get back serious. I am so happy that this is working. And it looks really good. I didn't even realize how great it looks. Okay. Anyways, like I was saying, so this is the minimum requirements for your credit profile, meaning I don't care what credit score you have. I don't care if you have over a 700. I don't care if you have over a 750. This credit profile is the minimum viable product, okay? Literally. Meaning that if you ever want to have a stab at having what's considered excellent credit, and it's not just a credit score, it's actually like your credit profile, hey Sam, your borrowing power. You need to at the very least have these checked off your list, okay? You need to have these checked off your list. So I'm gonna go down the list. Number one, the first thing that is getting cut off. Listen, 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 listen. I can't. I refuse to get back messed up. Okay. So look, it's just gonna have to. You can see enough. You can see enough. Anyways, this I'm gonna say it too as well. All jokes aside, I am gonna say it. So you need to make sure that you have at least 4 accounts open. Okay. 4 primary accounts open. What are primary accounts? That means that they are accounts that's in your name. It's not tied to anyone else. You're not an authorized user on the account. You don't have a co-signer on the account. You don't have a co-borrower on the account. If you are, for example, married, it's not an account where you and your spouse shares. It is an account that is only tied to your social security number. That is considered a primary account, right? Why that's important? Simply because everybody has their own, we all got our own social security numbers, and we all have our own credit profiles. So it doesn't matter how many accounts that you have. The ones that actually move the pendulum forward when it comes to your actual borrowing power, it is primary accounts. So you got to make sure that you have at least 4 open, and they have to be open, 4 open accounts. Anytime you have less than 4 open accounts, your credit profile, no matter what your score is, no matter what your score is, will always fall into a thin credit profile, an inexperienced credit profile. So that means that you can have an 800 credit score, you can have a 750 credit score, and you still won't have great borrowing power. You still gonna get approved for low limits, starter or like moderate limits, right? You're still not going to get like the best interest rates and APRs and stuff like that, right? So you want to make sure that your borrowing power matches your credit score. Ideally, you want your borrowing power to surpass your credit score, right? In case you don't know, banks don't actually care about your credit score. Lenders don't actually care about your credit score. They care about your credit profile. They care about your credit profile way more. In fact, about 70% of lenders nowadays, they don't just take what credit score that the bureaus have assigned you, or the bureaus are reporting on you. They actually just do they actually take what's on your credit profile and assign you what's called an internal credit score, meaning that like they completely bypass whatever number TransUnion, Equifax, and Experian is reporting. However, they take the contents of your credit profile, and then they themselves will assign you an internal credit score. So I say all that to say your credit profile matters way more than your credit score. Your credit profile matters so much more than your credit score. There are people with 750s who still can't get approved for much of anything, right? You want your borrowing power to surpass your credit profile. Your credit score. You want your borrowing power to surpass your credit score. How do you do that? You make sure that you have at least 4 open accounts, primary. You make sure that of those 4 accounts, at least 2 of them are credit cards. If you don't have at least 2 credit cards, then unfortunately your credit profile will always be considered a limited experience or an inexperienced credit profile, meaning that the limits that you get approved for, they typically are going to fall under either starter limits, which is 2500 and under, or moderate limits, which is 10,000 and under. If you find that no matter how long you've been building credit, how good you've been doing regarding your credit profile, if you find that you can't get approved for over $10,000, chances are your credit profile and the structure of it and how you have it set up, it's not suitable to get you to the next level. It's just not suitable. You haven't shown in black and white, you haven't shown your lenders that you can be a trustworthy borrower, right? So again, at least 4 accounts, 2 of which should be a credit card. It doesn't matter what credit card it is. It doesn't matter the limit on the credit card. You just need to have 2 revolving accounts, which are which are credit cards, right? What was I about to say? Oh, and then a third account right? So mind you, I just said you need to have at least 4 accounts. You can have 4 accounts and get a 700 plus credit score. I tell you that all the time. You don't have to go into crazy debt to build your credit. Like, stop listening to what these people keep telling you on like TikTok and stuff like that. No shade, I love TikTok, but I'm just saying, like, you do not need to have 12 accounts, 10 accounts, and buy all these trailers. You don't have to do that. You don't have to do that. You can, with 4 accounts, you can get a 700 plus credit score and actually have the borrow worthiness, the borrow ability to buy a home. I'm talking. I've been doing this for 10 plus years. Well, it's 10 years. This year makes 10 years. However, the point is, I've seen any credit score that you can name, any credit profile, the from the worst to the best. I've seen it all. I've seen it all. What matters is your credit profile and how you are behaving with the accounts that you have on your credit report. And one more thing that I want to add before I continue, this is especially to the people who have bad credit. It's especially to the people who have bad credit. And just in case you're wondering, bad credit just means that you have derogatory accounts on your credit report. Bad credit doesn't mean that you have a 400 or 500 credit score. It literally just means if you have negative accounts. So even if you are a person who has negative accounts on your credit profile, the best thing that you can do is build positive credit. The worst thing you could do is ignore your credit, think that you need to wait 7 years before you start utilizing your credit. That is trying to think of a nicer way to say it. I was gonna say that's stupid, but like, y'all don't, a lot of y'all don't know my personality on her, so you might take that a little offensive. But it is stupid. It really is stupid to say, okay, I'm just not gonna touch my credit for 7 years. It's very stupid, but I'll think of another word or whatever. Um, it's not wise. It's not wise. Okay. It's irresponsible and it's not wise. What is wise though, even if you do have bad credit, instead of only focusing on disputing your credit report, getting deletions, that's usually what people are eyed at. I mean, that's usually the only part that people want to do. They feel like that's the only solution to their credit issues. They feel like, okay, I have bad credit, so the only thing I can do is challenge my credit report, dispute accounts. That's not true. The only way to have good credit is to build credit. Okay. The only way to have good credit is to build credit. It ain't to get everything deleted off your credit profile. No. Actually, what lenders care about is your active accounts. They care about what you've done in the last 24 months. That's primarily what your entire your credit score and your borrow worthiness is mainly based off the last 24 months. It's mainly based off the last 24 months. And of course, we can talk about disputing and all of that. Of course, y'all know that's like one of my favorite subjects, but not unless we talk about building first. Because a lot of times y'all be skipping building and then just want to dispute all the time. I'm like, that's not going to get you what you want. That's not going to get you the house. It's not going to get you the car. It's not going to get you the lowest interest rate. It's not going to get you the high credit limit. Like, that's not what is going to get you there. They don't care that you don't have collections or charge offs. No, no, no. We've gotten the game wrong. We think that good credit means that you don't have collections or charge offs. No, no, no. Good credit means that you've built great credit. You've built and shown your lenders that you can manage a credit card, that you can manage loans, that you can abide by your loan terms and your loan agreements and stuff like that. That's what they care about. So even if you did just file bankruptcy, get this profile set up that we're talking about today. Even if you do have collections, y'all should be the first people who get these, who report this credit profile and see how much of a difference it will make in your applications. Okay. So again, you need to have at least 4 open accounts, all in your name. 2 of those 4 accounts needs to be revolving accounts, aka credit cards. Regardless of the limit, it could be subprime, it can be I don't it's at the tip of my tongue. For some reason, I can't even think of it. Anyways, it could be subprime, secured. That's what I was gonna say. It could be secured. It could be subprime. It could be, it doesn't matter the company either. You literally just need it to report to all 3 credit bureaus. And if you don't have any options, we can go over options in a second. So your 3rd account, I need you to have at least 1 long-term installment. A long-term installment is any loan that is over 36 months. So the loan term has to be over 36 months. So think of, if you have student loans, you already have a long-term installment. If you're financing a vehicle, you already have a long-term installment. If you have some personal loans, depending on the loan, will fall in the long-term installment category. It's what are those furniture accounts? Like if you like the furniture stores, right? The financing, when you finance like furniture and stuff like that, 9 times out of 10, that's a long-term installment, unless you like chose to pay it off within like 24 months or whatever. The point is, you need at least one loan over 36 months. That's called a long-term installment. Okay. And then the fourth account, you need at least one short-term installment. What's a short-term installment? It's any loan under 36 months. This can be some personal loans. This can be any credit builder loan. Most banks will offer some sort of credit builder loan. If you don't have a bank or whatever the case, get a self account, get a kickoff account. If you have a Navy Federal, they have what's called a pledge loan. All they are literally all the same thing. Different companies just offer it. Um, Yes, yes. Now, there are rules to these accounts, so we ain't done. It ain't that easy. Okay? But it's easy, but you just gotta be specific, right? So those are the four accounts that we just talked about. Two credit cards, one long term, one short term, one short term. Okay. Now what? Here are my rules. This is my rules, and it's not going to work unless, well, let me just say, if you are a person who want to take the most efficient and effective route to good credit, regardless of what your credit score is right now. It could be 400. You could have X amount of charge-offs, or collections, and all of that. That doesn't matter. I'm talking about specifically building your credit profile, right? So you have the four accounts, two credit cards, two installments, one long term, one short term. Here are my rules. You cannot end the short-term installment early in under any scenario. You cannot end the short-term installment early. Okay? That's number 1. The second rule is you also cannot have not one. You can't have no late payments on your short-term installment. Why? You need to have a loan with 100% payment history on there. Okay? It is vital. That's vital. Now let's just say you already have a self account, or a short-term installment, and you have already paid late. You got to get another one. It does not count. I'm sorry. It doesn't count. Do not pay that loan off early, nor pay it late. Pay it on time, and abide by the original loan term. So if it's a self account, for example, and you pick the 24-month option or whatever, and I think if you get self, I think the lowest is maybe like $25 a month. You pay that $25 a month for 24 months. No ifs, ands, or buts about it. You need it to be at 100% once you're finished. Okay. That's I don't even know how many rules. That's number 1. Number 2, your credit cards. Oh, well, let me address the other long-term loan. That was just for the short-term loan. The long-term loan, there's a little bit leniency. And obviously, we don't aim for this leniency, but I'm just saying it doesn't disqualify the entire account if you have, for example, like a student loan with late payments. No. However, you do need a long-term installment, or I'm sorry. However, on your long-term installment, if you do have late payments on there, you want to have at least an 11-to-1 ratio of payments on time payments for every one late payment. So what do I mean? If you have late payments on your long-term installments, make sure that account has at least 11 one-time payments for every one late payment that you have. So in other words, because that was a little confusing. In other words, for a late payment, you need 11 one-time payments to cancel out one late payment. This is just a general rule regarding any installments on credit reports. It's always an 11-to-1 ratio. So for every one late payment that you have, you literally need 11 on-time payments to make up for that late payment. Okay. That's how much one late payment affects you. Okay. So if you do already have a long-term installment and you do have a couple late payments, for example, on your student loans, as long as you have, let's just say you have 3 late payments, right? As long as you have, what is that, 34, 33. So as long as you have at least 34 on-time payments for your 3 late payments, then you're good. You're good. That account still counts. Okay. Oh, your name's Shonda too. Hey, that account still counts, right? But if you don't, then make sure that you do not close that loan until you do. Okay. Make sure you don't close that loan until you do. Now, obviously, the best case scenario is if you have a long-term installment with no late payments. That's going to be better, right? But if you do, it's not the end of the world. Another thing, I followed your steps in knowledge and I grew 15 points in 3 months. Shout out to you. I know that's right. I know that's right. Uh, Back to what I was saying. So now I gave you guys the rules for the short-term installment. I gave you guys the rules for the long-term installment. There are rules for the credit cards. The 2 credit cards that you have, oh, y'all already know I don't play about credit cards. So I had to say this one until the end because this the one that we're gonna have to fight over. I already know y'all gonna be like, "Oh, no, 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 no." Yes, we get strict when it comes to credit cards. Okay, now with the credit cards. Okay. Now for everybody who don't know me, I'm not willing to sugarcoat when it comes to like talking about credit cards. So like, yeah, I'm not even gonna make excuses. Listen, when it comes to your credit cards, when it comes to your credit cards, if you have a starter limit on your credit card, you cannot afford to carry a balance. You can't afford to carry a balance. And let me be more specific. If you have under like if you have a starter limit, a beginner limit, like maybe $200 or $500 or under 1,000, I'll say, you can't afford to carry a balance. Why? If you ever want the credit bureaus, or not the credit bureaus, if you ever want your lenders to trust you in order to get a $10,000 credit card, a $20,000 credit card, why do you think that they would trust you if you showing them that you cannot even manage a $500 credit card? Hmm? They're not. They're not. They're not. What you're doing though, when you do carry over a balance, especially when you report like a 30%, which I know that it's not your fault because that's what we're taught. That's what that's what they tell us. And it's the industry standard. They say, hey, make sure you just don't go over 30 percent and make sure you just, pay back your credit cards to at least 30% and you're good. That is a lie. That's a lie, guys. Not if you're trying to increase your credit score. You cannot afford to report 30% if you don't have an 800 credit score. And it's just like, I have over 800 and I still don't report 30%. That's way too high if you're actually trying to get funding, if you're actually trying to increase your credit score. But I would not suggest that if you have a starter limit that you carry a balance. So that doesn't mean that you can't use your credit card. It does mean that whatever you spend. So listen, just a general rule, just as a general freaking rule, on your credit cards, do not spend anything that you can't pay back within the same billing cycle. So if you can't pay it back within 30 days, then you don't need to spend it. You don't have it. You cannot afford it. You cannot afford it if you can't pay it back within 30 days. Now that's a long time though. Most jobs pay you every 2 weeks. That's 2 pay periods. If you cannot start to responsibly handle and manage your credit cards, then it's going to be bad for you in 2026. Y'all already know FICO 10T is out. Companies are adopting FICO 10T. That's the newest versions of our credit score, and they grade us a whole different way. Lenders have access to way more information specifically on our credit cards, specifically regarding our credit cards than they ever have before. And we'll get into that if you guys want to in a second, the details of that. But so if you have, made a habit, or if it's usual for you to carry 30%, or report 30%, is not good enough anymore. It really is truly not. And I'm only saying this because if I was recording a video today actually, because I was you guys know the last 2 videos I've been telling you guys about all the changes that they're making with credit scores, and we've been seeing this. If you're in the group, you already know this. Like we've been eyeing this for a while. I've been telling you guys, hey, this is what they're doing. I'm seeing that they looking at bank accounts and all of that, right? But more than that, what the credit bureaus or not the credit, I keep saying the credit bureaus, the lenders after 2025, where the reporting came out where they said that, the average credit score is highest that it's ever been in the United States and etc. And oh, that's a good question, but I'm gonna wait. The credit scores are the highest that they've ever been. Well, one thing that I noticed was, yeah, the average credit score is the highest that it's ever been. But if you look at the average credit limits and funding, it's the lowest. It's lower. So in other words, our credit scores are going up. The average credit scores are going up, but our borrowability is going down, right? I want to go on a whole rant about that, but I'm really trying not to. Secondly, companies were upset about that. Lenders actually was very upset about that because a lot of people basically what they realized is like a lot of people were falsely inflating their credit scores, right? And they have installed so many So many. I'm talking about the credit bureaus. They have installed so many different programs to spot that, to spot falsely inflated credit scores. I'm telling you guys right now, if you have authorized user accounts and you've been dependent on those, oh, under FICO 10T, it's not gonna matter. It's not gonna matter. Like it's so many updates that I want to tell you guys about. That's the problem when I don't go live in a while. When I come, I just want to talk about 20,000 different things, but I'm trying to stick to the subject. Trying to stick to the subject. Okay. So back to the list. Child, it's something that I seen today that pissed me off. And I was like, oh my goodness, they really tried. It's with TransUnion, but we'll talk about it. Stephanie, I'll show you one in a second. Give me a moment. Where was I at? Oh, anyways, your credit profile, I mean your credit card. You cannot afford to carry over your balance, okay? I mean over your limit. The best reporting that you can do, the best utilization that you can report rather is between 1 and 9%, okay? 1 and 9%. So that doesn't mean that you can only use, 10% of your credit card. That's not what I'm saying. If you you got to learn how to properly pay a credit card, which is understanding when your statement date is. Your statement date is the last day of your billing cycle, and that's actually the only day out of the entire month that your balance matters on your credit card in terms of your credit score. Your statement date is the only day that matters. Okay. Once your billing cycle ends, your bank sends the credit bureau your utilization for the month the same day that they send you your credit card statement. So as long as you guys find out, identify your statement date as well as your due date for each of your credit cards, and start making sure that by your statement date, your balance is below 9%, you will be good. Even if let's say you max out your card, right? Let's say you got a $500 credit card and you had a bill for $500 and you paid and you maxed out your credit card. Nothing's wrong with that. Just as long as by your statement date, you make sure that you pay back at least you make sure that you do not carry over a balance more than $50 on your $500 credit card, because that's under 10%. Does that make sense? Oops. See it again? Y'all need to see it again? Yeah, I can pull it back up. It's the wrong one, chill. It's so insane how it's showing backwards to me on YouTube, but I'm really trying to ignore it because y'all said it was good. So that's fine. So I'm gonna run down it real quick before I take some more questions. So the builder's profile that I recommend, regardless of what your credit score is, this is the most efficient way and effective way to increase your credit score as well as your borrow worthiness. Okay, have at least 4 primary accounts that are open in your name by yourself, nobody else. Of those 4 accounts, 2 of them needs to be credit cards. It doesn't matter the limit, doesn't matter the bank or company, doesn't matter. You just need to have at least 2 credit cards. Your third account, have at least 1 long-term installment, which is any loan over 36 months. Make sure that you have just pay it on time, child. I can't even whatever. And then have at least 1 short-term installment. Your short-term installment, you cannot end it early, so you have to abide by whatever the original loan term was, and you cannot have any late payments on your short-term installment, or you have to do it again. Okay. Once you have these at least 4 accounts, so if you already have 2 credit cards or whatever the case may be, that's fine. But you want to make sure, you want to make sure that you have this for at least 9 months. Okay? Have this for at least 9 months before you make any moves on your credit profile. Don't apply for anything for 9 months. You need to be gardening, what we call gardening, for at least 9 months. Example of a short term, it's any loan under 36 months. So it can be a personal loan, it could be a credit builder loan, it could be Kick, it could be Self, it could be a pledge loan from Navy Federal, it can be an Affirm loan, the one that it's more than the 4 payments. Yeah. If I got a $200 secure card, I can use 80 of it as long as it's paid off before my statement date. Exactly. You can use 200 as long as you do not report over $20 by your statement date. Don't carry a balance over $20, and then you're good. You are great. Advice on getting a higher limit on cards that have dropped your credit limit. I don't even know where the screen at. The number one reason if they dropped your limit, did you have other late payments on your credit profile? Did you have recent collections or something like that? If they dropped your limit, you're either not using a card or you're your credit score has decreased since you've been approved. Well, what if your utilization is higher than 30%, but you're making the payments? So if you're making a pay, I'm assuming, are you saying like you're trying to pay it down? If it's higher than 30%, is your credit score is not going to grow that much. And if you've been reporting 30%, your credit score is likely stagnant. But if you want your credit score to grow and you want your borrowability to grow, you have to report a lower utilization. 30% is just way too high. Are you sending this to the right email? My credit score dropped 206 points after the student loans were able to show on my credit. Can I dispute it? Oh yeah. You know what? Student loans is a really big thing. Let me ask you this. The only issue that I've seen with it, because most of the times it's because unfortunately, like you perhaps didn't get on a plan before they started back reporting. However, what I have seen, sort of like a little leeway, it is if they did not report 30 or 60 and they went straight to 90, which is technically, according to Metro 2 compliance, that's technically not right. They're not supposed to go straight to 90, and most federal student loans do. And so the only success I've had with that is challenging that, and maybe 40% of the time it was fixed, but it's not like a guarantee. Okay, another thing I wanted to show you guys. Is it on here? Let me see. How I go to the next? Let me see. Hold on, y'all. Let me see if I can go to the next slide. Or actually, I don't even know what the next slide is, but I'm hoping it's the list. Okay, perfect. Let me move out the way. How do I move out the way? This is a list for, like, because I know a few of you guys were saying like you cannot get approved for a credit card, so like you didn't know what to do. And can y'all see the whole thing, or am I still in the way? There, y'all know I always say it is not true that you cannot get approved for a credit card. It's not true. You know why? Because there is a credit there are multiple credit cards available for any credit profile. Like, I've never seen a credit profile that could not get a credit card. Now, perhaps the credit cards that you're applying for, your credit profile is not suitable for. Like, your credit profile does not qualify for the credit card that you're applying for yet. So therefore, you may have to get a different credit card in a different tier for now, until you build your credit score and your borrow ability, and then you can get approved for the card that you want. However, it's not true to think that, you just can't get a credit card. That is not true. I don't care if you just filed bankruptcy. There is a credit card available for any credit profile, from subprime all the way to freaking invitation only, if want to go there. Yeah, can y'all see the whole thing? Oof. Okay. I I won't say I can move. Look, I have to still plug up my second screen. I haven't did that yet. So, child, we just thugging it out for right now. Is more than two inquiries bad? No. Y'all already know how I feel about inquiries. I don't even waste my time disputing them, because lenders don't care about it. If you believe that inquiries are the reason why you're getting denied for credit, that, number one, that's a lie. But number two, there are other things wrong with your credit profile that's actually causing a denial, and it's not the inquiries. Inquiries are the least thing that lenders care about, and therefore should be the least thing that you spend your time or energy on. Truly, if you're still getting denied credit, it's not because of inquiries. It's not. There perhaps may be something else wrong with your credit profile. You're there in the questions are there too? Okay. Perfect. What's did y'all screenshot this? Because I'm gonna go to the next slide. Is Chime a credit builder card? Yeah, Chime is fine. Yep. So I put my LexisNexis is there in order to start off with. In order. Oh, you're saying to dispute it? So I did an entire webinar on YouTube called I think it's like challenging third party agencies. I'm trying to figure out the exact title. You'll see it. Just go to my videos and you'll see it. I believe it. Perhaps it may even say LexisNexis. If not, it says third party. But I did an entire webinar on how to challenge them. So they don't care about hard inquiries even when buying a home. Absolutely, buying a home is increase. Absolutely not. The only time I've ever seen an inquiry affect a home purchase was because like the person that I was assisting to get their home, they had, it was like, I don't remember the exact number, but I know it was like over like 50. And so, and the only thing that the lender wanted them to do is to tell them what they were applying for. And that's it. But it's not, no. That don't mean, now hold on. Let me, because I always have to be clear. That's not, I don't mean to say go out and apply for any and everything. Absolutely not. I'm not saying that. I'm not saying that at all. What I am saying though is most inquiries, if they're loan inquiries, they're getting deduplicated anyway, meaning that, let's say you went to a car lot, and they ran your credit 20 plus times. Your credit profile is only being affected at the weight of one, for the weight of one, as long as it happened within a 14-day period. It's called deduplication, right? Now, if it's credit cards, credit card inquiries do affect you each individually, but loans, they don't. They don't. But as you guys know, you can't. Okay. Did y'all get this? I'm gonna go to the next thing, the next screen. I don't know what's next, but I'm gonna see. I forgot I could use my Apple Pencil. Okay. Here are examples for like the short-term installments. I just realized what presentation this was. I thought this was the other version. Honestly, we could have went back and just honestly went through this whole thing. But I'm in a way. Hold on, y'all. See if that's better. No. I'm just, hold on. Hold on, y'all. Cause let me actually put this back on my main screen so I don't have to keep doing that. Give me a second. Hold on. Child, I promise you I won't ever bring this iPad. It's too much with the iPad. I should have just brought my laptop. Hold on, y'all. Dang, go back to the screen, child. Okay. What was I about to do? Oh, I wanted to move the thing. Where the little screen at? Okay, wait, let's. Oh, okay. Let me just change like the window. I was trying to. Can y'all see that? The entire screen? Now it's like cut off a little bit. Oh, I can make it. Can I make it smaller? Hold on, I'm trying to make this green. I won't even waste my time editing this video. I know that. All these mistakes today. Okay. Come on, bro. All right. I think that's good. I think that's good. All right. That'll work for now. Yeah, I'm so tempted to end this dang on live and come back because that's the thing. I haven't. made a video in so long and I really, really wanted to. I'm not gonna do it though. Okay. I know I miss y'all too. That's what I'm saying. Look, and it's just giving me an issue. But that's because I am glad. Oh, y'all, guess what I realized today, right before I came live. I realized that I hit 100K on YouTube. They had no idea. Had literally no idea until I was like looking at my email and I received an email from YouTube and it was like my plaque. I was like, I didn't even know I reached 100K. So shout out to everybody who follows me on YouTube. Actually, if you don't, go and follow your girl. You know, go and follow me. You know, we usually nah, we ain't really a little more smooth than this. This just kind of like it is what it is. However, there are like full blown webinars that are on YouTube for obviously free for anybody to watch and learn about your credit. But yeah, I was like, OMG, that really like made my day. But yeah, let's go to the next one though. So that's the the short term installments. So if thank you. If you guys needed options for short term installments, here is a list. Wait, how you go back? By the way, here are my socials. Okay, here's the list again for the person who asked. I know it's been a minute. I was sick for a good like 2.5 weeks when the new year first started. Oh my goodness, y'all. Like when I say it was something that swept my entire household, like it was one after the other getting sick. Like I'm talking like it wasn't like a little, it wasn't that sickness. I've never in my life, I've never even caught, I don't believe that I caught COVID. If I did, I was asymptomatic. However, this, whatever we just caught, oh my goodness. It like, I actually was like, yeah, this is strange. Okay. That's what I was about to do. All right, so because somebody asked me this question, I just wanted to go down this. Y'all know I go down this every time. Thank y'all. I go down this every time, but I always find it important to, give a baseline of this because I truly find that once people understand this, then their credit starts to make a lot more sense than it ever has. And by that I mean, listen, if you're confused about credit, right? Like, a lot of times, we make it a lot more complicated than it has to be. But when you think about your credit profile, if you think about a pie and to truly understand how credit works, you got to think about your credit score as a pie, right? And there are 5 categories. There are 5 slices to the pie that we have. Our credit profiles are broken down into 5 categories. That is payment history, amounts owed, which is credit utilization, and then you have credit age, hard increase, and credit mix. Payment history is 35% of our credit score. That 35% is worth up to 192.5 points. Okay. And to go back just a few steps, credit scores in general, they range between 300 and 850. I'm talking about FICO. So between 300 and 850. That's 550 points, meaning that no matter how bad your credit score is, you're never going to go below a 300 credit score. Regardless of how good your credit score is, your FICO score, you're never going to surpass 850, right? And so with that being said, there is 550 points that you can control, that you can get as many as you possibly can or lose as many as you possibly can. So those 550 points are broken down into 5 categories. Number one is your payment history. That's the biggest aspect of our credit score. That's the thing that matters the most. Are you paying on time, right? And so that's worth, of those 550 points, payment history alone is worth 192.5 points. So a lot, right? And then your credit utilization is 30% of our credit scores, right? And it's worth up to 165 points. What's credit utilization? What's amounts owed? It's your credit utilization. So remember when I was telling you guys, don't report a 30% because that's not going to actually grow your credit score. The reason why I said that is because it is worth up to 165 points. So that means that even if you don't have a credit card, if you believe that you can, increase your credit score, your borrow ability without a credit card, then you are literally giving up 30% of your credit profile. 30% of the available points that you can have. 165 potential points that you literally can have right now today. This is why I tell you guys, do not wait until you fix your credit in order to get a credit card. It makes no sense. Even if you do have collections, charge-offs, whatever the case, whatever's wrong with your credit profile, the worst thing you could do is bypass these 165 points. This is the only category, credit utilization amounts owed. It's the only category that has no bearing on derogatory accounts, meaning that you have to have an active credit card in order to get these points. Number one. Number two, your collections don't affect these points. So you can have, let's say, 20 freaking collections. I mean, I'm praying you don't have 20 collections, but even if you do, it still is not going to affect these 165 points. So you could be getting all of these 165 points even with 12 plus collection accounts. Okay. If you file bankruptcy, the best thing you could do is make sure that you're getting as many of these points as you possibly can. Because why? Your payment history is going to be affected when you have collections, when you have any late payments. You can't control that, right? However, your amounts owed is the section that you can always control. You can always control your credit utilization, which is why you should be getting as many of those points as you possibly can at all times. Okay. The easiest way to get those points is right here. Between 1% and 3% is if you consistently report between 1% and 3% on your statement date for your credit cards, then you will get as many of those 165 points as possible consistently. Okay. However, as long as you stay overall just under 9%, between 1% and 9%, as I tell you guys, then you will be getting majority of those points. But I wanted to show you guys this because, as you guys know, the industry standard is 30, right? We know that they tell us to report 30%. Where does 30% get you? Right here. 30% gets you right here. So of those 165 points, if you are consistently reporting 30%, you're literally leaving 75 plus points just on the table. Like, you're leaving 75 plus points that you could have on the table, and it's just there, right? Make sure, if y'all don't take anything from this live, make it, please, please, please make sure that you identify what your statement date is, number one, and start to report between 1% and 9%. It will change your credit profile. I was gonna say overnight. I'm obviously being dramatic when I say overnight. However, it is the quickest way to change your credit profile. So back to what I was saying. We have payment history, we have amounts owed. The next section is credit age. Credit age is 15% of your credit score, worth 82.5 points, right? Now, credit age is your experience. How much experience do you have with dealing with credit? Your credit age is based on the average age of your credit accounts. So, meaning anytime when they deleted or removed from your credit report, you lose credit age. Anytime you close a loan or an account early, you lose credit age. Any person who has ever paid off a loan early, you probably have experienced your credit report decreasing, or I'm sorry, your credit score going down, and you wondering, like, why the heck did my credit score go down and I just paid off my loan? Or, why isn't my credit score increasing and I didn't paid off this loan? That's because your credit age. Our credit age, you need to have open accounts in order to get this credit age. Okay. So that's why I tell you guys, you cannot end your short-term installment early. You can't end that short-term installment early. The only way to build credit is to actually allow the payments to report monthly. So when we closing accounts early and trying to remove everything off our credit report, we're actually ticking away at our credit age. And credit age, yes, is only worth 15%. However, in terms of your borrower worthiness, lenders care way more about your credit age than you realize. Why? Because it speaks to your experience. How long you been dealing with credit? Anybody can have a good 6 months and doing good on their credit report, but can I see, if I'm a lender and I look at your credit report, does it appear that you are trustworthy? Credit is trust, guys. That's the thing. Credit is just your trust number. Like the lenders only care about how much they can trust you or how risky you potentially are. They don't care about anything else. Can you be trusted? The only way that they can tell if you can be trusted is by way of your credit report. The absence of derogatory accounts is not it does not equate to good credit. The presence of good accounts equates to good credit. Okay, so again, make sure that you are actually utilizing credit and paying your loans or your accounts monthly without trying to just like get everything removed and delete them or even close them. All right, so anyways, the next section is hard increase. It's only 10% of our credit score, worth up to 55 points. This is why I say you could have freaking 80 inquiries and still have a 795 credit score. Do you see why I don't waste my time even talking about inquiries anymore? Credit mix. Oops. Credit mix is it weighs the same as our hard inquiries, right? Is they're both 10%, they're both worth up to 55 points. However, I will say credit mix, though it's only worth 10% of our score, right? It affects your borrow ability way more. Okay, so credit mix just means that you have a mix of accounts on your credit report. Y'all know the profile that I recommended. That is the perfect credit mix. Why do I recommend this credit profile? Because each category that we just went down, this credit profile hits every bucket. It literally is built. I designed this credit profile to be to get as many of those points that we just talked about. It aligns with the algorithm of our credit profile. How our points are allotted, this breakdown a lot aligns with that, right? This is why I say you need to have at least 4 accounts. Why? Because now you're not getting penalized for having a thin credit profile. Anytime you have less than 4 accounts, you will be penalized for having a thin credit profile. So when a lender pulls your credit report, even if you have a 760 or whatever credit score, you will still get the thin profile penalty. You don't want that. Why? Because if you have a thin profile penalty, then you will be stuck in the beginner's tier in terms of credit limits, borrow ability, and all of that. You literally are only going to get, regardless of how long you've been building credit, you will not qualify for experience limits. You just won't. You have a thin credit profile. So you have to have at least 4. The 2 credit cards, it aligns with our credit utilization. It aligns with the credit mix. It aligns with all of it. Okay. It's a reason why each of these recommendations are on here, because it does align with how our credit scores are broken down. It feeds what a lender wants. It feeds their algorithm. Their ideal client candidate has at least this. And this is minimal, right? So if you already have these certain things, or if you already have more than 2 credit cards, then that's fine. Just make sure that you have at least 2 active credit cards. How to check rental history. So there are, for rental history specifically, I would suggest that you get Experian Rent Bureau, that report. I would suggest that I have a whole list. I can pull it up in a second, but don't let me get off subject. I can pull it up though. Give me a second. What else I want to show you guys? Okay. Let me actually, and then another thing that I did want to show you guys. Come on, bro. This thing is driving me. Okay, I wonder if I hold on, y'all, because I'm trying to figure out how to do this the easiest way. Let's see. I would have to pull it up on my iPad. Let's see. Like exit out. Why is it not exiting? What the heck? Okay. What's the easiest way? Y'all want to see? Hold on, y'all. Yo, I need my second screen because I don't like this at all. I miss y'all too. Look, but I'm back now. I am Oh, the third party. Hold on, let me freak. The problem is like if I wish. Oh, actually, here go. Come. Hold on, let me make that bigger. Here's the third party. Yo, yeah. Hold on, cause this thing. All right, here for the person who just asked. Oh, okay. Can y'all see that? Hmm. Trying to make it smaller so y'all can see it, but and I gotta figure out how to like not show the whole thing, but like for right now, I'm literally not about to mess with it, so it's just gonna have to be how it is, okay? But hold on, okay. What I want to show you. So you asked which reports to pull if you have an eviction. Of course, evictions are not on our credit reports, right? However, it is on your third party reports, your rental reports that your leasing agents or whatever they will pull, and so you need to clean them. So here are that's employment, but here's tenant screening. These are the top ones. The work. Why is that under there, bro? Come on, it's big. Okay, hold on. Is that better? That's probably too big. Yeah, that's for evictions. Or you can still have a report if you left a balance at the place, even if they didn't officially evict you. That's perfect. Okay. Oh, oh Jesus. Help us, Lord. Okay. How can I where was we at? So I'll just go down the list. Uh the first one are the first these are third party reporting agencies, guys, for those who are confused. So the first category is employment and background screening. So if you are applying for jobs and let's say you got denied because you failed your background check, you need to pull these reports. These ones, right? I don't even want to point at them. You see them right there. I don't want to touch it. I mean, because it's gonna move it. But these are going to be the biggest players when it comes to background reports. Pull those reports and clean your reports. You need to challenge the information that's on there. And then the next one is tenant screening. So like evictions or like any bad history with leasing. And I'm gonna make it big. I don't know how. I mean, because I can't hit present since it's like it's not a presentation. Hold on. Banking is next, but I'm trying to whoever can. I guess y'all already screenshotted it, so I'm gonna go down. All right, so the banking one is this one. So the main ones are check systems, early warning systems, and telecheck. So if you can't get a bank account at a traditional bank, you need to clean your banking reports. Um, it's big. It is big, ain't it? I don't know how to. I gotta still play around. I ain't used to going live in this little like program that I'm using, so like I'm trying to figure it out still. Okay. When I come back live though tomorrow, because tomorrow morning I plan on like doing getting a little more acquainted with this because child, it's a lot going on my screen and I'm trying to figure it out. Okay. So today really is just kind of like a hey y'all, what y'all doing, and testing out my new setup. But tomorrow, by the grace of God, I'll be a little more efficient with it. Cause it's yeah. Yeah. So this is like a little throwaway. Um and actually, you know what? Since y'all just being so gracious with me, I'm gonna show y'all the kit. Okay. So just screenshot it. This will be on sale probably next month. If you're in Credit Academy, you'll get it for free, but I am just gonna show it real quick if I can pull it up, child. So if you're trying to challenge a report, if you don't know like what to send, I'm gonna pull it up real quick and y'all can just screenshot it. If it comes up, child. You know what? I just want to do it on my main screen. Hold on. I'm literally gonna have to just pull it up on my main screen because I can't do this iPad. Yeah, Credit Academy. Yes. Hold on, y'all. Oh, freak. Yeah, so here's the thing. I just got a new computer, right? And I created a whole new Apple ID because I didn't want to connect it to my personal. And so I keep forgetting that all my files are not on here. But I'll just show you what I have on here, which is not a lot. So yeah. Oh, I thought I was looking at it the whole freaking time. Too big. So hold on. I'm gonna get to the letters. Okay. I'm gonna show y'all this whole thing without. Hold on, cause I know that's too small. Oh, I know what I could do. Where the screen? Hold on, y'all. I know it looks crazy right now, but give me a second. I'm trying to edit it. You need a producer. You hear me? You heard me, cause this is it's a lot. It's a lot. I don't know how people do the one man band show, like not trying to do 3 different lives and doing all this. Uh, don't freak out. I know. Yeah, I have to do this live over tomorrow. I am not satisfied with how the show has been ran. And then it's like my computer keeps freezing like now, and then I'm like, did I just pay all this money for this dang on computer and it can't even handle like my normal? Because my computer normally don't free, and I bought a Mac Mini, so I thought it was like more powerful than the regular Mac, the MacBook that's right on over this side. I'm like, I could have kept my computer. I could have kept my normal computer if it was gonna do all this. Um, you know, it's not working, y'all. Is actually frustrating me, and I don't want to get frustrated. So we're just gonna get back to our normal Q&A, and then tomorrow I will show you guys, just because I did promise you guys, and I hate promising y'all something and I don't do it. I think I'm actually just gonna hook back up my regular computer until I figure this out. I mean, I didn't get a Mac Mini. I got the whatever the other one is, the little tower thingy. It costs way more money than the computer I had, but it's like not. It's acting like it's like you would think it's cheaper, because I'm like, my old computer I would run 3 different lives and all of that, and it would be fine. This computer is literally acting like it can't even handle it. It's crazy. So if you're tech savvy and you know what I'm doing wrong, let me know, cuz I don't know. Okay, so let me answer a few more questions or whatever, and then I'm actually low key tired. But look, tomorrow though, would y'all prefer like around noon? What's tomorrow? Yeah, tomorrow's Saturday. So like around noon, I thought that would be like perfect. Or I could do it later, like a nighttime live, like I normally do. So which one y'all prefer? Because honestly, I think I'm just gonna hook up my computer that I had, and I plan on doing like a full like webinar, where we have our ish together a little bit more. Um, let me see. I think I'm trying to follow all the comments. At night, at night. I do be like in the evening lives, but then I keep saying like, I keep saying like, dang, I'm gonna start doing them earlier. But I'm a night person though. Like I'm not a morning person. I am a night person, so it does work for me. Okay, so I'll do it tomorrow night. And so, what do y'all want the subject to be? Do y'all want to talk about the new changes with the credit scores? I already have that PowerPoint prepared in terms of like everything that's changing in credit. So regardless of which topic that we focus on, I think I am still gonna kind of do a rundown about all the changes that's in credit. So do y'all want to focus on like home ownership, credit repair, credit building, or credit changes? Which one? What to do after bankruptcy? That's a good topic. I don't think I focused on in a while. But that will go with credit building. And then a part of me wanted to do repair, because I kind of feel like lately I have not talked about credit repair as much as I used to. So, and I have like tons of presentations for that already, and I wouldn't have to, uh, I wouldn't have to make one, make a new presentation. So, credit repair and changes. So this is what we're gonna do, because I like how you thinking, and that go already goes with like, okay, I don't have to prepare a new presentation. So what we're gonna do tomorrow, the subject tomorrow, I do want to go over the credit changes, because I want to post a video next week about it, and so I'm gonna do it on live. To kill two birds with one stone. So we'll talk about the credit changes, but then we'll focus the bulk of the live on how to repair your credit. Because I just have not done one of those in like over a year, and like I'm just like, that's like my usually my main topics, and I just haven't focused on it in a while. So we will do credit repair, and then as the promise, I will show you guys my kit. And then if you're in Credit Academy, you'll be able to download it or whatever. So you don't have to worry about like screenshotting or whatever. But yeah. Yeah, bring y'all notepad, because it's gonna actually be like a webinar. And child, we're gonna figure out the screen and all of that. I think I already told y'all what I'm gonna do. I'm just gonna either get my old computer or bring my actual laptop, Cause the iPad, yeah, it was cute. Like the setup, if y'all can see my setup, it's like really cute. Like how I got my screens, because I thought I was like in there. I was like, oh yeah, the iPad. Yeah, but it's not working. Okay. So we're gonna go back. We're gonna go back to old school. And yeah. No, Credit Academy is not on Facebook. We have our own community. At 7. I like 7. East. I'm Central. I keep forgetting I left Virginia. Central time zone, 7 o'clock, 7 p.m. And then no, I'll wait till tomorrow to say that. Yes, we do have new credit scores. There are a lot of changes in our credit profile. Like it's honestly a lot of changes. More than because my last two lives, are y'all aware of are y'all aware? I know if you're in Credit Academy, you're already aware. But for the people who are not in Credit Academy, are you guys aware that your bank accounts are being considered in your credit lending decisions now? Did y'all know that? Did y'all know that your credit report is not the only thing that's being considered anymore? It's your actual bank account. I mean, like meaning your lenders can see your bank account. Did y'all know that? Did y'all know that? I'm just asking. Did y'all know that? Hmm. So banking, child, banking is like super important right now. Super important. Like they are not playing about banks anymore. I was Let me just show y'all something real quick before I leave. Where is it? Is it this? Where is it at? Oh, here it go. All right, let me just show y'all this real quick. Just disconnect this iPad because this. All right. Mm-hmm. Is this the one I want? I'm gonna show you something real quick. It's with the bank accounts. What did I title that? Don't y'all hate when y'all can't find the title? I don't know what the hell I titled that. What? Oh, maybe it's this. It is. Okay. All right. So look. Mm, is it gonna act right? Can y'all see that? Like if I click on this tab, can y'all see it? Why is it showing like that? You know what? It is the weirdest thing on how it's showing because like okay. All right. Y'all can see that, right? Okay. So here is one of the latest moves that was made, which is FICO. Our FICO partnered with Plaid. Do y'all know what Plaid is? Plaid is like the software that's used to connect bank accounts to lenders. And so their Ultra FICO is like the new version of like this product that FICO has unveiled. And the only part that you really need to know like about or care about rather is the fact that lenders are actually seeing inside of your bank account now. And so this is what they see. Let me make sure it's switched. Yeah. It's still stuck on that screen. Hold on. Like I need the computer to follow me. If I click on another tab, you need to go to the other tab, not stay in the tab that you're in. You're like messing up the flow. Okay, but let me show y'all what they see. Because if you don't care that they have access to your bank account, I just want to let y'all know what they get to see. Meaning every lender who pulls your report, by the way, and because this is by FICO, this is not tied to a specific credit like FICO. FICO. They'll see how often you overdraft, and this is already like in 2026. This is already here. Okay, so they'll see a 24 to 36-month window in your bank account, inside your bank account, how often you overdraft it, if ever, whether your income is stable. So they're going to monitor your deposit, like the frequency of your deposits. So they'll determine like how often you get paid, obviously, but also how much or how long you can go between. I'm trying to see how they actually worded it again. It is what do they call it? Where is it at? I know I noted it down. I think it's like the paycheck to paycheck. Here we go. So they're literally looking for if you're living paycheck to paycheck, and how they determine that. If you read the full article, it's very interesting. But how they determine if you are a person who lives paycheck to paycheck, if your money between your deposits, if your bank account goes between 10% of your like whatever it was deposited, then they'll consider you going paycheck to paycheck by the time your next payday comes up. I mean, so like if you get paid every 2 weeks and between that 2 weeks, your bank account hits 10% of whatever you were paid, they're going to ding your account as paycheck to paycheck. Like, and it's literally called like because I thought it was very interesting that they titled it paycheck to paycheck. I don't know why. It just was interesting to me because I'm like normally they kind of clean up the language and make it a little more, prestige. But it literally is called paycheck to paycheck penalty. And so they're going to monitor that if you live paycheck to paycheck. And if you do, then that's going to affect your limits. Um what else? What else? What else? What else? Oh, if your account hits zero, you'll be dinged for that. If you do not have a savings account, I've been telling you guys about this, the savings account, but let me tell you how to bypass this. Make sure that you have a checking and a savings account, right? I already told you guys that, but make sure your savings account, if your savings account has at least $20 in it, then you're going to have a funded savings account. Okay. So you'll pass that. I know, right? Yeah. Um, I'm gonna talk about the rest of this tomorrow. So see, I didn't already prepped about like 6 different presentations that I wanna, discuss with you guys or whatever. But until I kind of get the system right, I don't even want to go into it because it's gonna just irritate me. Um, but do y'all like my new background? I redid my office actually. I painted the walls. Y'all can't see the wallpaper, but yeah, I like it. I'm liking the vibe of it. Still, yeah, I think I like the vibe. I don't know if I like that picture back there because it's a little plain. But yeah, I'm liking the vibe. And I like my new camera. I like how it looks, but I just gotta get my system right. I hope my sound sounds right or whatever. Like I said, this is just kind of like a test live with my new setup to make sure everything was like copacetic or whatever. And then tomorrow we're gonna do a webinar. Okay. Did I organize what? What? Yeah, this is the what camera is this? This is the ZVE10 or something like that. Uh the ZVE10. Sony ZVE10. And I don't know what lens. I can't tell what lens. 7 o'clock, 7 p.m. tomorrow. And I plan on like being on the same websites that I'm on today or whatever. But I'm like tomorrow morning, I'm just gonna spend my time like playing with it to see how to work it. Cause I kind of fidgeted around with it for only like maybe 20 minutes or so before I came live. Cause I thought I had it figured out, child. Then I came live and it's just, yeah, I don't have it figured out. So I gotta get a little more acquainted with the system and then we'll be good. We will be good. So for the webinar, it's like I said, tomorrow at 7 o'clock Central. If you're in Credit Academy, you'll be able to obviously, watch the replay whenever you want, and the kit you'll be able to download. But if you're not in Credit Academy, you won't get the replay, nor will you get the kit, but you can like screenshot it or whatever. Some of it, not the whole thing. No, I didn't quit doing videos. I have not quit doing videos. No. All right, so I'm gonna see y'all tomorrow. Okay. I'm tired. It's like if I don't know why I feel so really late. I'm gonna see y'all tomorrow, 7 p.m. Be here if you want to learn how to fix your own credit in 2026, and you want to understand all the changes in credit and all like everything that's going on. Because it's actually a lot going on, y'all. All jokes aside, it's a lot going on with our credit profiles. We have new credit scores. We have new qualifications. Actually, credit has changed more than it has ever changed more than it has changed in over 20 years. So there are a ton of things that we need to talk about. When I say while I've been sick, I have it's so many topics that I want to talk about with you guys. And tomorrow we will start talking about those important changes. And again, I'll have my presentation and stuff like that. So come tomorrow with a notebook and a pen and be prepared to like learn. Okay, because we're gonna be a lot more serious tomorrow. So yeah, I will see you guys tomorrow. So meet me here at 7 p.m. Central Time. Okay. And especially if you want to learn how to repair your own credit. Okay. Be here. Be here or be square. All right. Uh-huh. Wait, what you say? Yeah. No, I don't know what you're talking about. Or maybe I'm like not understanding what you're saying. I feel like I should know what you're talking about, but I just don't. It's not computing. All right, so I'm gonna be here. I'm gonna be back tomorrow, y'all. I will see you guys later. I don't even know how to end all these dang on lives, child. I love you guys. Bye bye.